provincial government is making an announcement at 1 o'clock on how it plans to tackle housing affordability. This comes after it announced yesterday Ontario is hiking a real estate speculation tax as part of its effort to tackle the housing crisis.
Now, Robert Kavcic, a senior economist at BMO, says there's a full-scale attack on Canadian home prices. And Robert joins us now live here on CP24 Live at noon. Talk more about that. So what do you mean by full-scale attack on Canadian home prices, Robert?
Well, we've obviously had a tremendous run in house prices to the tune of 30, 40, 50% or so over the last year, depending on the market. And all the while, policy kind of stood back and watched. Well, now, just within the last couple of weeks or so, we've seen policy start to tighten up at the provincial level. We heard from Ontario yesterday in terms of expanding the foreign buyer tax and increasing the size of it. We've seen the Bank of Canada move on interest rates, and we're going to see quite a bit more on that front in the months ahead. And we have a federal budget next week, which may or may not have measures directed at the housing market, but there has been some chatter that maybe at the federal level, we're going to see some action on this front as well.
Okay, so Robert, it seems like the wheels are slowly in motion. I think the big question is, when can we expect to see the results of all these policies? Because home prices, supply, let's talk about the prices. They've been at an all-time high, and supply is still an issue.
I think you'll start to see this have an impact very quickly. And, fundamentally, it takes time for interest rates to work through the economy and various tax measures to take shape. But what can change very quickly is psychology. And as soon as there is a sense that the market is softening or even perhaps starting to weaken a little bit, I think you're going to see a lot of the speculative and investment-driven demand back off. And you're probably going to see more listings come to the market too. Because let's be honest, if you're sitting there right now thinking of maybe listing a house, why would you list it today when you can pick up 10% more tomorrow or a week from now? So as soon as that psychology changes, I think you're going to see market balance and market conditions change. And we've seen examples of this in the past where it can swing pretty quickly.
When has that happened, Robert? I'm curious because real estate, we seem to be talking about either bubbles or potential crashes or, reasonabilities, the prices coming back down. Like, we've thought maybe for the last 15, 20 years that may actually happen, but the prices seem to go on a sort of fairly steady line. You're the economist here. When does that really happen? And do you really think it would be a significant drop or more of just a slight pullback?
No, we're not talking about any kind of crash or major damage-inducing decline in house prices like we saw in the U.S. 10 or 15 years ago. The market here is just fundamentally too well-rooted in supply and demand fundamentals and demographic fundamentals. So there is real fundamental strength here. The problem is that prices just ran ahead of those fundamentals over the last year and since COVID started. And you asked about an example of this. If you go back to 2017 in Ontario, and specifically the GTA, we had a tremendous increase in single attached home prices. And what we saw in April of 2017 was the Ontario government come out and first institute this foreign buyer tax, which they then went and increased yesterday. And at the same time, the Bank of Canada moved off near zero interest rates and started to tighten up policy and raise interest rates, and mortgage rates crept up. And very quickly, we saw psychology change. And in the single detached market in the GTA, we saw prices come down about 10 or 15%, then find a floor, and then kind of stabilize and drift sideways to slightly higher over the next 3 or 4 year period. So it has happened very recently, and it kind of gets lost in all of the noise. But these things do happen.
All right. And Robert, do you think that there's a risk that the significant interest rate hikes might topple the housing market?
No, I think topple is too strong a word, because those real underlying fundamentals are still there, and they're not going away. Like, the millennial demographic is not going away. The immigration flows are not going away. And the labor market is extremely strong, which is why we're seeing interest rates rise in the first place. So it's not a matter of toppling or quote unquote crashing the housing market. This is a matter of taking an asset price that has got too frothy and just bringing it back down to reality. And a couple more rate hikes from the Bank of Canada, I think we'll be looking at a market in the second half of this year that is a lot more balanced than we've been used to over the last 1 or 2 years.
So effectively, Robert, if I'm kind of reading between lines of all of what you said here, we should kind of not expect these sort of 15, 20, 25% increases in the value of our homes, going into the next year or two, that there'll be a more sensible, rational market going forward with the hikes coming up and maybe the changes that we're going to hear from both the federal and provincial governments?
I think that's exactly right. The 15, 20, 30% price growth is behind us. You might see, a bit of a correction in certain pockets of the Canadian market, certain pockets of the Toronto market, but then ultimately some stability, and probably, you can very well see a multi-year period where prices come down a little bit and then go sideways. And again, that has happened many times historically. It's just, it sounds kind of strange because we're so conditioned to see prices running at this kind of very strong pace.
Yeah, it's been a long run as well. Okay, Robert Kavcic, senior economist at BMO. Really appreciate your analysis this afternoon. Thank you.
Thanks, Robert.
Okay, thanks, guys.